Good afternoon, everyone. On behalf of the Women Members Excellence Committee of ICI, it is my pleasure to welcome you all to Yashasvi Ideal Series 32. Yashaswini and Ideal is a Wednesday series of programs conducted by the WMEC for the Women CS and by the Women CS. This series is an extension of Sky High Synopsis, which concluded its 100 episodes. It is one of the committee's initiatives to not only disseminate information to women members on technical updations and non technical skills, but also to empower and inspire women members to come at forefront and realize their verbal skills at public forum. With this, I would now like to introduce our speaker for today, CA Neeti Agarwal. Neeti is a seasoned tax advisor with over 15 years of experience in international and local tax matters, specializing in India and Singapore. She has strong background in regulatory compliance, investment fund setup, and business restructuring. As a CA, Neeti has successfully represented clients before the Mumbai Tribunal courts and various tax authorities, ensuring optimum outcomes in complex transactions. With this, I would like to welcome Neeti Agarwal on the dais.
Hi, thank you everyone. Um, Let me just share my screen. Right. Today's topic is alternative investment fund, key tax aspects. As you must be aware that alternative investment fund is a vehicle which is supposed to be registered with SEBI. It is somewhat, akin to mutual fund, but not exactly mutual fund. This vehicle was introduced somewhere in 2012 for setting up an ecosystem in India for fund management businesses. Um, so we are going to capture the tax aspects relevant for the investment, alternative investment fund vehicle in India. Now, why is this important to go to, evaluate what is the tax implications for an AIF? So you would see that from the day it was launched till 30th June 2024, almost 11 lakhs crores of rupees has been raised in this vehicle for making investments in India. This is not only important for us to contribute towards the growth and development of various industries in India, but it also strengthens the capital market of India. So therefore, it is extremely important to know that what are the tax implications, and you would see that there are so many players in this field as of now who are raising money from various investors, including foreign investors. So out of this, almost 11 lakh crores of rupees, around 3.5 lakh crores of rupees is coming from foreign investors. All this data is available on SEBI website. And hence, I thought that it would be important to discuss the tax implications for this vehicle with this crowd. Uh, just as a concept, what is AIF? This is a typical structure of an AIF. AIF can be set up in the form of a trust, it can be set up in the form of an LLP, it can be set up in the form of a company. Generally, maximum of the AIF that has been set up till date has been set up in the form of a trust. AIF has to take a registration as an investment vehicle with SEBI under AIF regulation. It raises money from investors. It can raise money from domestic investors. It can raise money from foreign investors. To the extent it is raising money from foreign investors, it has to comply with relevant regulations under exchange control under FEMA. This trust is typically managed by trustee, and the funds or investment decision of the AIF is generally taken by the manager. Why we have mentioned onshore manager? Onshore manager because it's a vehicle set up in India, so it is typically managed by a vehicle or manager located in India. While the manager can also be set up in the form of a company, it can be set up in the form of an LLP. Generally, we have seen that most of the managers, they prefer to set up in the form of an LLP just because of ease of repatriating the profits from that entity. AIF can make investment into various companies. Here, for the sake of representation, we have shown that AIF has made investment, say, in 4 investee companies, but it can invest in numerous investee companies depending upon its investment strategy. And obviously, the investment strategy, concentration norms, etc., have to be in compliance with the SEBI regulations. The purpose of this call is to discuss the tax implication. But before going to the tax implication, I just thought that we should just at least get a broad understanding of how the vehicle operates and who are the parties involved. Uh, uh, there can also be pooling of money from various investors in an offshore fund, which can be managed by an offshore manager, which is administered by an offshore fund administrator. But we are capturing only the tax implication of AIF in this discussion. Now, AIF actually can be set up in the form of 3 categories: Category 1, Category 2, and Category 3. Category 1 pertains to infrastructure funds. So if you could see in this particular slide, there are various subcategories of Category 1. It is infrastructure fund, social venture fund, venture capital fund, SME fund, special situation fund, angel fund, etc. It comes in the Category 1. Basically, those categories of funds which are very important for the long-term development of the country. Then there is category 2. There is no subcategorization of category 2. Category 2 is the residual category, where if you don't fall under category 1 or category 3, then you fall under category 2. Maximum money, as you can see, has been raised under category 2. So out of almost 11 lakh crores of money, almost 9 lakh crores of money has come under category 2. Category 3 is a special category that if you want to do, say, hedge funds, you want to invest into complex strategies, etc. If it's an open-ended fund, then it comes under category 3. Why it is important to understand these 3 different categories from a tax perspective? The reason being that tax laws give different tax treatment if you are a category 1 and 2 AIF, and a different tax treatment if you are a category 3 AIF. So therefore, we need to understand that there are 3 types of AIFs, and the tax implication will vary depending upon which category you have taken the registration in. So on this slide, we are discussing the tax overview for category 1 and category 2 AIF. Category 1 and category 2 AIF typically has same tax implications. They have been given same tax regime by the tax laws. The reason being that both of them generally make investment, on a long-term basis into private companies in India. So since their strategies are somewhat similar, it's just the sectors are different. The tax regime for both these categories are almost similar. Now, here what I have done is that instead of going section by section, what are the different tax implications for different income and different parties for an AIF, I have just laid down for the ease of representation in this particular slide. And I will take you through what are the implications for different parties involved. So in the AIF, as we had seen in the typical chart, the key is investors who are giving their money to an AIF for making investment. The second is AIF, which is raising money and will make investment into an investing company. So most of the income will come at the AIF level, which will eventually get distributed to the investors. And then there is an investing company which has received investment from an AIF. So let me just start from below. Whenever there is an investee company making any payment to an AIF, irrespective of the nature of that payment, whether it is dividend in nature, whether it is interest in nature, or capital gains in nature, or any other income, any payment made to an AIF is not subject to any withholding taxes in India, except where the nature of the income is in business income. Now, if you will see in this entire chart, there is a distinction being made between taxation for business income and taxation for other incomes. The reason being that the prima facie position is that category 1 and category 2 AIF do not indulge into business activity. They only indulge into investment activity. So therefore, there is a tax benefit provided to the AIF vehicle if the AIF is set to undertake investment activity which will generate capital gains, which will generate interest and dividend income in the form of income from other sources. And hence, the taxation is divided into this category, that whether you are earning income in the form of business income or whether you are earning income in the form of other income, which is capital in nature or income from other sources. So similarly, in this context, when investing company is giving any payment to an AIF, it will not withhold any taxes if it is not business income. If it is business income, then of course, depending upon the nature of that income, the normal tax provisions, TDS provisions will apply and appropriate taxes will have to be withheld by investing company. But in 99% of the cases, most of the payments that investing company will make to an AIF may not qualify as a business income. At the AIF level, now what kind of income will AIF earn from investee company? AIF will earn capital gains from the sale of investments. It would earn dividend income from the underlying investment. It could earn interest income if the investment is debt in nature, or it could theoretically earn some kind of a business income from investee company. To the extent it's a business income, then AIF will pay taxes at the applicable tax rate. Mostly it will be taxed at MMR. If it is any other income, whether it is capital gains or whether it is interest income, dividend income, it will be exempt in the hands of AIF. That is because under Section 115 UB, AIF has been given a limited tax pass-through status, and it says that they will disregard this AIF as a vehicle and the income will be taxed in the hands of the investors or the shareholders. So this investors is very much akin to a shareholder in a company. So the income will be taxed in the hands of the investors on a same and like manner in a proportionate basis, and hence any other income, whether it is capital gains, dividend, or interest, will be exempt in the hands of an AIF. However, whenever AIF is making payments to an investor, it has an obligation to withhold taxes. So while investing company didn't have an obligation to withhold taxes on payment made to an AIF because AIF is exempt from taxation, AIF has a obligation to withhold taxes when it is making payment to an investor because investor is subject to tax for the income that AIF earns. The income tax laws provide tax rates for such withholding. So that tax rate depends upon the residential status of the investor. As we had discussed when we were discussing the typical structure, that AIF can raise money from both resident and non-resident investors. So to the extent the investors are resident of India, the TDS rate will be 10%. To the extent the investors are non-resident of India, then taxes will have to be withheld at rates in force. Rates in force, of course, will include treaty rates to the extent those treaties available to the respective non-resident. If there is any loss that arises at the AIF level, then the treatment of that loss will also depend upon the characterization of that loss. Since business income is taxable at AIF level, any business loss will be subject to carry forward at AIF level. Any other loss, that is, generally it is capital gains loss, or any expenses that you incur, says under Section 57 for earning income from other sources, but typically it is capital gains loss. So those losses, since it is not taxable at an AIF level, you cannot carry forward at an AIF level. You have to pass it on to the investors, and investors can carry forward those losses in their respective return of income and claim set off, etc., as per the provisions of law. For investors to claim those losses, they have to hold the units of an AIF for a minimum period of 12 months. So this is what the taxability at AIF level looks like. Now, as we had discussed that if it is not in business income, then AIF is treated as a pass-through vehicle and the entire income gets taxed at investor level. So at investor level, that taxation will happen at applicable tax rate, and business income, because it is already subjected to tax in AIF, it will be exempt in the investor level. So from this chart, you could see that the entire mechanism has been devised to ensure that there is only one level of taxation. Even if the income flows from investing company to AIF and from AIF to investor, since it is merely a mechanism for making investment, it is ensured that there is no double taxation, unlike in a company kind of a structure where once company earns income and it pays corporate taxes, any further distribution of dividend from a company or any capital repayment from the company is further subject to taxation in the hands of investor. So there is two level of taxation in India for a corporate vehicle. But unlike that, in AIF, there is only one level of taxation. Either it will be taxed in the hands of an AIF if it is business in nature, or it will be taxed in the hands of the investor if it is investment in nature. Um, I will go to the next slide. The next slide captures tax implications for Category 3 AIF. Like I discussed some time back, that for Category 1 and Category 2 AIF, uh, tax laws provide a specific tax regime. And, under those specific tax regimes, say Section 115 UB and Section 1023, where they have laid down that which income is exempt in the hands of investor, which income is exempt in the hands of AIF, and how the taxation will happen on a look-through basis for the investor. For Category 3 AIF, there is no specific tax regime. Therefore, the taxation of the Category 3 AIF will depend upon how the Category 3 AIF has been constituted. If it has been constituted in the form of a company, then corporate taxation will apply. If it is constituted in the form of an LLP, then LLP taxation will apply. If it is constituted in the form of a trust, then trust taxation will apply. Since most of the Cat 3 AIF has been set up in the form of a trust, I have discussed the trust taxation here for determining what should be the taxation of Cat 3 AIF. Now, as you will be aware, that trust taxation actually depends upon how the trust has been constituted, whether the trust is revocable in nature or whether the trust is irrevocable in nature. To the extent the trust is revocable in nature, then the income that is earned by the trust will be taxed in the hands of the investor or settler on a look-through basis in same and like manner, in the proportion to the settlement amount that the settler or investor makes in a particular trust. For an irrevocable trust, the taxation depends upon, again, the nature of the income. So if it is business income earned by an irrevocable trust, then the taxation happen at the trust level at maximum marginal rate. If it is capital gains, then taxation will depend upon whether the trust is determinate or an indeterminate trust. Determinate trust means at any given point in time, if you can determine who are the beneficiaries of the trust and what is their beneficial ownership in that trust, then it is considered as a determinate trust. However, there are a lot of judicial precedents and a lot of guidance around what constitutes a trust as a determinate trust. And therefore, there can be a lot of discussions with the tax authorities around whether a trust will qualify as a determinate trust or indeterminate trust. But typically, the logic is that if the trust it contains the name of the beneficial owner and contains the manner to compute the beneficial interest, then it will be constitute or considered as a determinate trust. If it is a determinate trust, then while the computation or the tax will be discharged by the trustee, but the trustee will discharge it as a representative assessee of the investors in the same and like manner had it been computed in the hands of the investor. So there is some kind of a partial pass-through status, not a full pass-through status, if the trust is set up in the form of a determinate trust. But the obligation to pay taxes resides in the hands of the trustee. The obligation doesn't go to the investor. If the trust is indeterminate trust, in the sense that you cannot determine who are the beneficial owner of the trust income or trust asset, or what is the percentage of those beneficial ownership of respective owner, then the trust is typically considered as an indeterminate trust. If it's an indeterminate trust, then the taxation happen at the trust level at MMR. So generally we see that all the AIFs, they like to fall under the basket of irrevocable determinate trust, so that they can have to some extent a pass-through like tax treatment for the investor, even if the obligation resides with the trustee. In this particular slide, we are just discussing what are the key aspects that one has to take care when they are doing the computation of income. So the first thing is characterization. As you would have seen that the entire taxability, whether it is cat 1, cat 2, or whether it is cat 3, AIF depends upon what is the characterization of income. There is a different taxable regime for capital gains income. There is a different tax regime for business income. So that characterization, whether it has to be determined at an AIF level or it has to be determined for each different investors. Now it will become extremely complicated if it has to be determined at each different investor level, because each investor may have different objectives, may have different uh, uh, characterization for their investments into a particular AIF. For Cat 1 and Cat 2, the way the law reads is that typically the characterization has to be seen at an AIF level. Under trust taxation, you can possibly take a view that the characterization has to be taken at AIF level, but there could be some questions around whether the characterization has to be relooked at the investor level as well. But generally, the characterization comes from the AIF vehicle itself. So if AIF is in the business, then the income that is earned, which is in the nature of business income, the same business income characterization will flow through in the hands of the investors as well. If the AIF is earning capital gains, then the characterization of income in the hands of investor will continue to remain capital gains. When you are doing computation of income, the second question is that whether the computation of income should be done on accrual basis or distribution basis. Now, in this structure chart, what happens is that investee company can distribute income or say declare income to AIF in a particular financial year. AIF may not necessarily distribute the same income in the same financial year to the investor. AIF can use that money to further reinvest, or can use the money to meet its expenses, or can use that money for its treasury activities. So there could be a timing difference as far as the investor is concerned upon accrual of income in the hands of AIF versus actual distribution to be received in the hands of investor. So it is, so the question can come that what should be the timing of computing the income, whether it should be at the time of accrual of income in the hands of AIF or whether it should be at the time of distribution of income in the hands of investor. So in most of the cases, we have seen that while accrual and distribution may coincide in the same financial year, the taxation may happen when the AIF is actually accruing the income from its investee company. So it should be ideally on an accrual basis at AIF level. Now, whether investors or AIF can claim deduction of management fees, the setting up cost, the investment cost that they are making, etc. So that will depend upon the characterization of income. If it is business income, then yes, you can claim most of the expenses, which are not, except for the capital expenses which are capital in nature. If it is an expense which is capital gains in characterization or income from other sources, then only the expenses which are otherwise allowed under section 45 or section 56, only those expenses will be allowed as deduction. So it is important that appropriate disclosures are made in form 64C and 64D. Now, what is this form 64C and 64D? Form 64C and 64D are the forms that AIF has to submit to the investors and to Indian tax authorities, giving details of their share of income when they are submitting it to the investors, and the respective share of income of the investor and expenses, so that investors can take their respective call on whether they want to claim a particular deduction or not, and a consolidated list of income details to the tax authority. So, which is what Form 64C and 64D is. It's a mandate under the income tax law for AIF to submit this form with the tax authority and investor within a applicable due date. In this slide, I'm just discussing few important circulars or clarification that CBDT has issued in connection with AIF. So, as you would be aware that CBDT in past have issued two circulars giving the characterization certainty for certain type of investment. One of the circular was in connection with unlisted shares, and it mentioned that any investment in an unlisted shares will be characterized as capital gains, um, provided the shares do not constitute control and management for the shareholder. So, category 1 and 2 AIF, since they are venture capital funds, infra funds, or general private equity funds, they could make majority investments into company, and by virtue of their shareholder agreement, they may have certain controlling or management rights in the companies in which they make investment. And therefore, on the request of the industry, CBDT had come with a clarification saying that if a category 1 and 2 AIF transfers unlisted shares along with control and management of the underlying business, still it will be characterized as capital gains to give certainty on taxation. Because if the capital gains characterization is not honored, then the entire business income characterization would fall through, and taxation at maximum marginal rate will become applicable. So, to give certainty on pass-through status of the AIF, this particular circular was removed. The second circular is in connection with indirect transfer provision. As you would know that, post Vodafone, there was an amendment in Section 9(1), and it said that if there is any transfer which of a foreign company which derives substantial value from Indian entities, then that particular transaction on a proportionate basis will become taxable in India. There was certain relaxation that CBDT had issued in connection to those indirect transfer. One of the relaxation was for dividend income, that if dividend income is repatriated from India to overseas company and from overseas company to its other ultimate parent companies, then it will be outside the purview of indirect transfer provision. Similar relaxation was given for upstreaming of money for category 1 FPIs. So, in line with category 1 FPIs, they had incorporated a exemption for category 1 and 2 AIF as well. So, any income that is distributed by a foreign company to its shareholders, which comes from the underlying investment in category 1 and 2 AIF, those income or those transaction is outside the purview of indirect transfer provision. The third circular is, which we have discussed in the previous slide, that any payment that you make to an AIF is not subjected to TDS. The last circular is that, this AIF, some of these AIFs, especially category 1 and 2 AIF, is allowed to make outbound investment. So they can make investment in companies situated outside India. Now, if there is a foreign investor which has invested into an AIF, and in turn AIF has, say, one of its investment is in the overseas company, then non-resident investor will not be subjected to tax for any income arising from such overseas company. Merely because it has invested through an AIF, the situs of taxation will not shift from overseas to India. So that clarification was issued in this particular circular. I have broadly captured a brief overview of the entire tax aspects applicable to various categories of AIF. I'm happy to take any questions that you would have.
Well, that was a very informative session by Neeti Agarwal. Thank you, Neeti, for such an insightful session.
Thank you.
In fact, the slides were also very understandable along with your explanation. And I'm sure everyone has now understood the tax implications of AIF in depth. So thank you once again. We don't have any questions relevant to the session. So I think we can move on to the next session.
Okay. Thank you. Thanks, everyone.
Thank you, Neeti, once again. Thank you.
Hello, everyone. I'm very excited to introduce our next speaker, CA Shreya Nagta. Shreya is a seasoned professional with over 6.5 years of experience in the field of corporate as well as social sectors. She initially started her career as a statutory auditor with major leading companies and transitioned as a indirect tax consultant supporting major Indian conglomerates with their GST compliances. Shreya is very passionate about leveraging her expertise to drive transformational transformation at the intersection of both social and strategy impact. She will be sharing insights on unlocking new career pathways, which I'm sure each and every person attending this session is eager to know more about. Without further ado, please join me in welcoming CA Shreya.
Hi, good evening, everyone. Um, thanks for the introduction, Chandana. Um, so, I would just like to share a deck on this entire topic of unlocking career pathways post CA. Yeah, is the screen visible?
Yes.
Yes.
Okay, great. The first thing was I actually wanted to understand what is the expectation that you have as an audience from this topic of unlocking career pathways. In Chandana, do tell me if there are any responses. Okay.
Hi. No, there are no any
There are no
next
responses.
All right.
responses.
All right. Okay. So broadly, want to kind of just go ahead with what are the pathways available for a CA. In my own experience, I have done my articleship at KPMG in audit, understood a lot of financial aspects of companies, worked with a lot of teams. Then post qualification, I moved into the indirect tax vertical of KPMG, where I understood, and I think GST was just coming in at that point in time. So did a lot of work in helping businesses transition into the new regime back in 2017. And post that, I think there was this urge to look beyond what we were already doing. And traditionally, what all the different areas that as chartered accountants we work in, I think I wanted to do something more. And that's how I kind of transitioned completely into a new field, which is called impact consulting. Uh, so I will keep dropping snippets from my experience into this presentation. And my objective here is to first create awareness that there are a lot of other opportunities available for us as chartered accountants, in addition to the conventional fields and areas that we are already working in. And second is that we really need to kind of put ourselves out there, move out of what we have been doing so far to actually reap and contribute to so much more, that's so much more in terms of opportunities, in terms of people, and broadly how we can kind of take our career trajectory and pathway even higher. Okay. All right. So, based on the curriculum, so far, I think what we have taken up in the past is, say, audit, where we do external audits, say, statutory audits, internal audits. We have taken up taxation as an area where we add value to companies, where we advise them in terms of direct tax, indirect tax. We help companies stay compliant with the respective regulations of the countries and also help them kind of optimize on these taxation on tax costs. And then kind of broadly, I mean, basketing this into one more area of other regulations that we help the companies follow. These could be majorly bucketed into regulatory compliances and advisory fields. Now, based on these kind of areas, we have built expertise and skills around financial analysis, where because of the audit that we do, we understand financial position of clients. We have these long-term relationships with the clients, and that kind of really contributes to our stakeholder management skills. That is right from getting right information from them for the analysis, and then kind of solving that problem. So, for example, in when I was doing GST, I remember that we had to kind of understand what the implication was going to be for somebody operating in a service tax regime and then kind of moving into a GST regime. So we had to understand what are the current tax costs associated with the service tax and what would change not just in financial terms but also at a transaction level. So I think doing all of that in-depth analysis, asking the right questions to the client, sometimes as their advisors we also know a lot about their business that they might also kind of miss out at different points in time. And I think that's how we have kind of built good enough expertise in stakeholder management. The third is on legal aspects of commercial laws that we have kind of studied in depth. Optimization of tax costs being one of the critical factors where we add value to our clients. And overall, last but not the least, financial efficiency is what we bring to our country, to our clients as a profession. Now, however, I think when we look at unlocking more career pathways, uh, the mantra here is that the more value you create, the faster your career accelerates. Right? So, what do I mean when I say that? Typically, this is what our life revolves around, right? The financial statements, and then we kind of focus. We kind of focus at this part of, say, when we are auditing, the numbers are already provided to us, and then our job is to kind of see whether these numbers, to audit as a third party whether these numbers are true and fair, they give a true and fair view of the company, and to ensure that the stakeholders or the shareholders of the company receive the correct information and can make informed choices about whether they want to invest in a company or not, if it is a listed company, and if it is a private company, whether the private company is compliant with the laws of the land. So here, what we're dealing with is, say, the numbers after they are created when you're auditing. In terms of taxation, we typically look at, say, this part of it, right? Where we try to optimize the tax costs for our clients, make sure that they are, this being a very critical part of any business, to exist and survive, a business needs to be compliant with tax laws of a country. And hence, this is where we add value. Now, what it is, I think that it is time for chartered accountants to kind of move up the value chain, right? This and move, when I say move up, I think we are also kind of doing a little bit around financing strategy, in terms of, where do we take loans from, whether it should be debt versus equity, what is leverage, etc. But there are completely new fields that focus on these. The completely new fields that actually focus on these areas. And some examples of the problem statements that we can now also solve for, that we should aspire to move towards, is, say, and again, I'm going from our favorite, financial statement position, how to increase revenue. So, what is, if there are multiple products of a company, then what is the right product mix? What should be the market entry strategy for this product? How should we price the product? In terms of, say, COGS, if there is where there is a raw material procurement, etc., how do you minimize those input costs? How do you increase operational efficiency? Uh, then you also, when as you come to gross margins, then that's how you kind of contribute to actually optimizing the number versus in conventional roles what we have been doing is that after the number is created, then we kind of look into and understand and analyze the current position of the company. So here it is a more proactive approach to adding value for the company, where say a businessman, an owner of the company, an entrepreneur would benefit from increasing the scale of the company, uh, and thus that is, I think, kind of helping us to get one more kind of career pathway into developing our own skill sets and our ability to add value. So these are the broad examples of problem statements that we can aspire to solve for. Moving forward, thus, all of this can, I've categorized these things into broad buckets. So in terms of career pathways, one is whether you have to decide whether you want to work for somebody as a job or you want to work for yourself as an entrepreneur. Then these are two different pathways. Today, what I will be covering is the first aspect. I will not be covering the entrepreneurship pathway. Having said that, all the skills that I will talk about and the general requirements, they are the bare minimum requirement even when you go for an entrepreneurship pathway. And in fact, that entails a lot more than that, more than the skills that are required for when we are working to solve the problem statements that I just spoke of. Okay. So, in terms of the non-conventional roles, careers beyond finance, there are some broad buckets that I have created. Of course, this is not exhaustive, but these are some of the main areas that people are now working towards. So, the first is management consulting. Uh, Within management consulting, it is typically strategy consulting, where we help organizations develop their strategy. Say it could be 3 years, 5 years strategy. And the amazing part about this is that it is not restricted to private companies. We can also help governments to uh, strategize uh, uh, strategize programs for public welfare. In fact, one example that I can share here is that uh, strategy, I mean, these management consultants or management consulting firms are recruited by governments, or rather, they partner with governments to build the strategy for developing a city ground up, like right from scratch. In fact, there are also uh, kind of contracts, etc., that for Mumbai, for example, where the Mumbai metropolitan region will be developed, the economic plan for, say, Mumbai metropolitan region is being developed by a set of strategy consultants. So these are very interesting problem statements that you may want to contribute to, and you could explore these kind of career pathways. Second, in within management consulting is industry specific. So there are consulting organizations that cater to sector specific problems. So there are ones that are, say, catering to fintech, specific ones for healthcare. Again, some of the big names in management consulting. So just the way that there is a big four in the CA world, for management consulting, there is a big three. They are called MBB. That's Bain, McKinsey, BCG, Bain. Again, there are certain dynamics where one goes down, the other comes up, etc. But broadly, those. And then there are tier one, tier two organizations like A.T. Kearney, Arthur D. Little, and then there is Booz and Allen, etc. So these are some of the examples. What my objective here in telling you about these organizations is so that you know that if you want to kind of get into this or even explore what really happens in this career option, these are the organization websites that you should go to. Check out their homepage, check out the projects that they are working on. They also publish case studies of the projects that they've already done. It would be really beneficial in case you want to explore career pathways here. Moving on, the next pathway is general management. Here, what happens is, so versus the consulting organization where you advise different clients, here you are part of the organization itself, like an in-house consultant, and you are helping the organization build out their strategy, build out how to grow in the next 5 years, or how to grow again, like by a certain target, or how to grow, whether it needs to be a geographical expansion or a category expansion, whether there should be kind of, again, what if there are some nuances in terms of changes in product mix that are required, what is working, what is not working, etc. So these kind of organization level, product level strategy decisions are uh, being part of these strategy teams, working very closely with the co-founder, is something that kind of falls into this category. Again, within the organization, there could be other areas where consulting, where you can add value to. So, which is operations. So, how do you make operations more efficient? In terms of technology, what are the different technologies that we can use so that uh, basically to kind of automate and take the organization to the next level in terms of service delivery. Uh, then there is marketing, which is one of the very critical aspects of any organization. So you would already be aware that marketing forms a chunk, and I mean it is at the apex of any organization, where they kind of work hand in hand with those preparing the organization strategy. So how do you actually create the need in the first place? Marketing kind of takes you through the entire customer journey, where you analyze whether you try to analyze the gap between demand and supply. So it really starts off there. Whether, and then you try to kind of monetize, I mean, try to estimate whether a business can come out of it. Do customer surveys, do a lot of research, move into what the target market is, what customer segments are available within a particular problem statement. uh, After you kind of map out what different segments are available, you decide that as a company, what is your capability, which segment would you want to cater to, and then you decide on your target market. And then kind of that's when you kind of move into what your product will be, or what the value proposition of the company would be, thereby moving into the product part of it, like creating that product, which is the product management role, right? So here in this role, people generally are focused on the product itself, what my customer needs are, and then accordingly kind of modifying the product. What kind of pricing would be required for that product. So basically, anything and everything to do with a particular product. Now, having said that, it is important to understand that within the product management category, there can be two main classifications: tech industries and non tech industries. So, if I have to give you an example, say Microsoft or Google, here the value of product people with product management capabilities is much higher, because uh, in tech industries, everything depends on the product itself. I mean by that, what I mean is, if you have, say, any new product that Microsoft has come with now, that, say, for example, Teams. So when Teams had to come out, everything is led by the product team. uh, there was a need that was identified during COVID, for example, that okay, there is a need for online communication. There were use cases and industries where this communication gap was required to be filled. Microsoft Teams then had to create a strategy around what their existing capabilities were, which was majorly B2B at that point in time, and then kind of decide whether they want to enter into the B2C market. If yes, which sector, whether they should enter into the education sector or not, etc. So all of these interesting, problem statements, considering, I mean, you would have to analyze the situation, uh, decide what are the parameters that you would need to consider to come at the final decision of go no go, like whether they should go into a new B2C market or not. If B2C market, what particular sector or not. So again, very very interesting things that you can kind of solve for. uh, People with tech background, or as chartered accountants, if you have also been very very up to date with technology, and you are interested in getting into these roles, and then I think product management is something that is for you. Moving on into investment banking. So here, the major problem statement. Again, I will talk about everything in terms of a problem statement so that you understand what kind of work you're going to do in each of these buckets. So investment banking, while it covers a gamut of things, two key things here are first M&A, mergers and acquisitions. So as investment banks, say X company comes to you, either they have a particular fund, and then they tell you that, we want XYZ returns. This is the risk profile of the people who are contributing to the fund. And then the investment banking company is expected to analyze the market, come up with opportunities where the contributor group would want to invest money based on their risk profile, and then ensure a certain X% of returns as expected by the investors. So finding out those opportunities. Second is mergers and acquisitions. I think I'll update the slides, but here it is about one company having a specific other company in mind, or some specific criteria based on which they are looking for a target company which they would want to acquire. As chartered accountants, we would have done a lot of due diligences that we are already aware of, right? So a lot of times we are asked to do tax due diligences, where we analyze whether all tax aspects of a target company are in place, so that the acquirer can kind of go ahead, at least from a tax standpoint. So from an investment banking standpoint, all of the analysis above the tax, I mean apart from tax, so from a transaction analysis, from synergy standpoint, from cost benefit standpoint, all the other analysis except for tax happens here at the investment banking level, right? Yeah, so then this is majorly, kind of a lot of capital markets also falls into investment banking, because they have to analyze existing companies, opportunities available, etc. So all the chartered accountants who are interested in capital markets, who have been following it for some time now, and interested in taking it up multiple notches, this would be a good option for you. And I think apart from these four key areas, there are a lot of other niche areas as well that we can pursue and create a lot more value. Um, at this point, I'll take a pause if there are any questions. Yes.
No, there are no any questions at the moment.
All right. So what are the specific skills sought for these roles? We did talk about these very, very interesting problem statements. Here, typically, these companies look for certain technical and generalist soft skills. In terms of the technical knowledge, there is, say, how much industry knowledge do you have? And they also typically look for rich work experience, so that they can, so that you can kind of adapt very quickly to solving these problems. And in terms of soft skills, very, very extremely critical slide over here. The most sought after skill is this critical thinking and problem solving. So when we say problem solving, it is more about structured thinking. So for example, you are provided with a problem statement that says the profits of a company are declining by XX percentage, and the client has uh, recruited you as their consultant to help to diagnose what is the problem and provide recommendations on how to solve it. So here, the problem solving skills typically analyze how you break the entire problem statement. So when we say, for example, there is a decline in profitability. So we would ideally first want to understand what the business is, who are the customers, who are the competitors, what are the products that the company is selling, which geography are they selling in, what is the magnitude of the problem, is this problem specific to the company itself, or is the entire industry facing the same problem? And then kind of breaking down the problem into, say, costs and revenues. Okay, so then kind of drilling down into revenues, price into customers, so whether the prices are a problem, whether the number of customers is a problem. I think this is like a very broad overview that I'm giving to you, but essentially you should have a structured thinking process, and that is what is required for these kinds of problem statements. You I mean, it is very logical in a sense. I mean, it isn't particularly rocket science, but it is more about sharpening your brain, bringing more clarity about each and every step that you take, and ensuring that you cover all scenarios when you're trying to diagnose a problem. So it's very logical, but at the same time, not very easy in general. Having said that, all of these skill sets, they are not new for us as chartered accountants. These are these are typically taught to us at B schools, where we actually do case preparations with our case competitions, etc., with our colleagues. But for those for people who are only chartered accountants who haven't kind of gone into the MBA phase, what you need to know is that we already have certain skills, right? Like I had pointed out in the earlier slides, we have these basic things in place like financial analysis, stakeholder management, etc. Now, all of these parts, these generalist soft skills that I'm talking about, these are an add on that we need to do. So, you shouldn't think of it as something that is not achievable or that only some very smart people can do it, etc. We can do it too. And that is the key message that I want to deliver in this webinar. Please consider yourself capable of doing this and start kind of thinking about these skills, understanding what really happens in all of these different roles, and putting yourself out there for a much greater kind of a contribution. I will just move forward in within this entire soft skill bucket. The second is articulation and communication skills. So here, it is about how you express what you want to say, right? So while you might be very smart and you have solved the problem in your mind, it is equally, if not more important, to be able to communicate it in the right way to your client. If I talk about management consulting as the pathway, here you actually directly deal with CEOs or CEO minus one CXO level people who are experienced people who have very limited time. So for them, it is important to understand the key issue and in a very limited time. So it is very important to articulate things and communicate them in the right way for them to be able to solve the problem in the company, right? So the third is, of course, stakeholder management, which we've talked of. Building presentations, this is an important skill. uh, and working under ambiguity. So a lot of times you don't have all the data, but you still have to kind of form some early hypothesis, initial hypothesis that you go with and kind of start working. You can't be uncomfortable with not having certain data, or you can't be uncomfortable with constantly changing or evolving scenarios. If I have to give you an example here, think about startups. Day in and day out, they face different types of problems, and all being startups, that is being small companies, the firefighting role is much more important. All the processes need to be set. You don't have systems and processes in place. You as a consultant or you as an employee of the startup or part of the strategy team of the startup need to build it ground up. It has its own pros and cons. If somebody really likes to kind of build out things, then and has the risk appetite and the patience to kind of so be I mean go through each and every phase of the startup, then I think the startup I mean being part of the strategy team of startup is one of the career options that you would like to think of. So yeah, I think these are the five main soft skills that are required to kind of get into those career pathways. All right. So you will ask me, all right, you did mention about what skills are required, but how do we actually augment our skills to incorporate these in our personal professional lives? My first advice to you would be gain the unique experience from a premier B school if possible. I am not saying it because I am at a B school, but what I did realize, in fact, I started my MBA like this year. I am into a 1 year MBA, but and that's after having done 4.5 years of GST and then 2 years of impact consulting. So I took pretty long to realize that okay, I should be kind of equipping myself with these skills. So I would really urge that if you are a chartered accountant with less than 4 years of work ex, you should definitely give it a try. The experience here is, I mean, from a premier B school, it actually kind of completely changes you. I mean, I have completed 6 months of my MBA right now, another 6 months to go, but I can already see a lot of transformation that is happening with me as we kind of navigate the hectic schedules. We get ourselves into that academic phase again. I know that as CAs, we do get asked that having cleared, I mean, the entire articleship phase, going through IPCC and then CA final. Uh, I mean, haven't you tired of studying? Why would you want to kind of put yourself there again in an academic setup? But I mean, it is difficult, right? Okay, it was for me as well because I cleared in 2016 and then taking up academics now again through for the preparation of the entrance exams, etc. So nearly 7 years of after that, kind of doing the same math things, but a little faster, but you have to kind of look at shortcuts, and then kind of going through the entire application phase. Uh, then after getting into an MBA college, where you have the country's best minds, kind of competing with them, etc. I think it's a very different ball game, very challenging one, but extremely important, and something that I would say that one must kind of try if it is possible. The next is practicing structured thinking for problem solving. I've already discussed this I discussed this in depth in the previous slide. But how do you do it? There are a lot of videos available on YouTube on problem solving. I think if you just Google it, you see how problems are. I mean, just under the topic of problem solving, you would be able to kind of arrive at. Get a fair idea of what happens here and build your skills. Third is networking, not just within the CA circles but also beyond the CA circles. I think this will help you know and meet people who are doing a lot of different things, and thus it is very important that you build friends. Build friendships here, or build professional connects with people who are doing something completely different versus what you are doing. In fact, if possible, I mean, just have a target that, say, in the next 6 months I will connect with people, at least 5 people who are not chartered accountants, either not chartered accountants or working in a completely different kind of industry versus what you are doing right now. I think that actually helps to look at, uh, incorporate a lot of different perspectives, understand what's happening in what sector, and it adds to your own knowledge and depth of understanding different situations. Fourth is focusing on the bigger picture. So this is very important, and which you don't have to kind of invest any separate time of yours to develop this thing. When you get a project, right? So say either you are doing audit, you come across a certain transaction which is not a usual transaction. You inquire about what this transaction is, and then generally what you would think is that okay, is this compliant, not compliant. I think now you should start going one step ahead and understanding or speaking to the higher up or senior people as to why this transaction was done in the first place, right? So typically you will find that there are some strategic intents of why certain either transactions are done or certain takeovers, etc., are done. So my point is not just to not just to restrict yourself to the say a due diligence that you are required to complete, or say a particular audit that you are required to complete, or say filing of returns. So if that is, I know that there are deadlines and we can get very myopic, But that is what I realized for myself, that I had been extremely myopic in my earlier times when I was dealing with all of these projects. It is time that we take one step back. While having the smaller picture, we should also understand the entire context around all of these transactions that are happening. Okay. Any questions so far? Khyati?
Yeah, there are some questions, but we'll take up after this session. Yeah.
All right. Yeah. Anyways, this is the last slide. So, okay. The fifth is breaking out of your mental barriers. Please push yourself outside your comfort zone. This is very critical. We need to be our best friends. We need to make sure that our mind is not what is restricting us from being ambitious. Please go out there. If even if you don't know something, it is okay. It is okay to ask somebody and just say that, I don't know, can you please can you please tell me what this is about, can you please elaborate on your experience. You can reach out to people on LinkedIn, and that who are kind of working in companies that you may be aspiring for, or roles that you may be aspiring for. They might not accept invites, but nothing stops you from being persistent, right? I mean, you send invites to maybe 15-20 people, at least one of them will accept the connection. And given that we are chartered accountants, seeing CA, our credit, we already have established a credibility, so people know, and generally they will accept a connection request. So I think please do that. Please break out of mental barriers if you have created any around yourself, and push yourself outside what you know that you are good at, and kind of try and learn new things. And lastly, again, very critical, build your own brand. Some platforms where you can do that is, first, online content sharing. Could be on LinkedIn, could be blogs, newsletters, etc. It is extremely important in the current scenario to differentiate yourself. How do you differentiate yourself? Is when you make your views and opinions known. Where to do that? LinkedIn is one of the good platforms because it is supposed to be a professional network and a platform. uh, People knowing your views, etc., it is that will kind of give you an edge. uh, and I think that's something that each of us can do. Maybe even, kind of putting one post a month on a topic that we think is important, uh, we are comfortable with, is kind of good enough. Okay. Yes, Kathy, questions?
Yeah, thank you, ma'am. Yeah, good evening, all. I am CA Khyati Pithadia here to deliver a lot of things for this session. First of all, I am checking the questions. There is one question from Astha Malhotra from Delhi, that how should we choose the B school?
Mm-hmm. Okay. So, sorry, Astha, right? Astha from Delhi.
Yes.
Okay. So, hi, Astha. Glad that we have you on this webinar today. How should you choose your B school? Interesting question. There are B schools are typically ranked by certain order at different places. It is important first, and that is why I would focus that only choose premier B schools. If I mean, that would be my preference. Again, you can kind of uh, consider your priorities. For me, what was important, I mean, yeah, I can tell you what I was thinking of when I chose a B school. um, so I was thinking about, first, what is the output that I want from my MBA, right? So because I wanted to get into consulting, management consulting, or impact consulting for that matter, I would think about B schools where where opportunities of consulting are higher. So in placements where there are people, companies of management consulting, if they are coming in, then that is the first preference that I had. Second, I did not want to do a 2-year MBA. So I had to think, and 1-year MBA options are very less here. Typically, things do get into executive MBA bucket. which also I did not want to go into because that bucket is very high. I mean, that bucket is very diverse in the age group. Typically, it was like anywhere between 6 to 20 years of work ex people come there. So like and the IIMs etc. There the average age group. So you have to know the cohort work ex. That is the critical parameter that you kind of need to think about. Yeah, so I think career options, work ex, duration of the MBA, broadly that would, and of course the ranking of the MBA. So those broadly these 4 or 5 things would cover the decision making criteria.
Thank you. Another question is that what are the avenues in investment advisory from Mumbai? Amol Borsai.
Amol, yeah, hi Amol, again, glad to have you on the session. I don't have in-depth knowledge about investment advisory. What I would suggest that you do is say pick up any one investment banking company, pick up their website, and you will check out in the services, in our services section. You can see what are the different kinds of services that they are giving. From if I were you, what I would do is any investment banking. I mean, say Morgan Stanley or say there is Avendus Capital. That I mean, these are just top of my mind names, and there are obviously other names. Do my services. First understand the scope and the problem statement that they typically solve for their the clients that they are working for. Second step would be go on LinkedIn. Go just type any one of these company names, the top company names. See people, go to people, and then try connecting with people, and then kind of speaking with them. I think that's a better way of going about it because I don't want to give a half-baked answer.
Okay. And other are like guidance for one is that Ritika Mohla from Kanpur. That is, what are the opportunities abroad for CA, and what guide on starting practice as a woman CA?
Okay. So the first question about opportunities abroad. Yeah, I think valid point. I haven't covered that in my webinar. But typically, if again, it depends on. I mean, I would break it into 2 buckets: abroad with MBA, without MBA. Without MBA, I know that these days there is a lot of demand in the Middle East because they also now earlier they didn't have tax laws, and they also have come up with taxes now in certain places in the Middle East, and there is a very high demand for chartered accountants there, especially Indian chartered accountants. I have also seen, and that means that your work role broadly remains same. It is just that your location is changing. So you will have to first decide whether you want a change in role or just a change in location, right? And why. Then there are also opportunities. I mean, of late I have seen a lot of this on LinkedIn because they also have fallen short of CPAs in the US. So earlier you had to do a CPA to do a similar role as of what you are doing here. Probably the quality of work might be better. Again, I have, this is just from what I have kind of discussed with friends. But uh, now, like license, I think last 5-6 months, there is some via media where you don't need to do a CPA or probably just do 1 or 2 papers instead of the entire set of whatever 7-8 papers they have, and you can still do a finance job. Yeah, I think this is what I know of. But in terms of a non MBA, if you are doing an MBA, then I think all doors are open for you. Yeah, the second question was on guidance on starting CA
practice
practice.
as a CA.
CA practice in India. Sorry, I think I'm the wrong person to ask because I haven't kind of ventured into that. And the entire objective of this session was other than the conventional areas, what we are focusing on.
Yeah. Okay. Thank you, ma'am. Yeah. Thanks to our wonderful speaker, CA Sriya Nagada ma'am, for apprising us. And yeah, it was, ma'am, it was a very wonderful session for the topic of unlocking new career pathways. You have guided us like new opportunities other than our traditional ones. So there are many, you may have mentioned that there are management consultancy roles are available. The non-independent directors roles are available for the women CAs. So these opportunities are really helpful in the today's era. Yeah, thank you. Let us give applause and heartfelt appreciation to all those who have contributed to making this event a success. And finally, I would like to convey my gratitude to all the wonderful women attendees here for taking time to join this webinar and making it a success. Thank you, WMEC team. Thank you.
Yeah, Khyati, just before we end the session, I would also like to thank WMEC for giving me the opportunity to speak today. I cannot see the audience, unfortunately, but if you want to connect with me, please feel free to connect with me on LinkedIn. And thank you, the entire team, the WMEC team, for literally kind of coordinating this amazingly well to the second. 5 seconds remaining, etc. I really appreciate, and I think this is something that we as CAs can do. The amount of process setting and process efficiency that we kind of bring to the work that we do, we will be able to carry forward, and it is a valuable asset and resource that we can carry forward in whatever we do. It's an important transferable skill. And it was, I don't know, I mean, whoever is on the other side, thank you for spending your precious 50 minutes with me, and would love to connect with you.
I would
Yeah,
also
thank you.
take this opportunity to thank everyone. Thank you if you guys have been listening to me. Thank you.